All right, what's up, guys? My name is Fair Sleem. I'm the founder of Trade with Tex. Today I wanted to go over something that I got a ton of positive feedback on in the chat room recently. So we do have a member chat room, and we have 2 webinars a week, and one of these webinars really had a lot of great feedback, but also I did see a lot of people calling out this same day trade and swing trade setup over the next couple of days afterwards. So it seems like this is something that's not too difficult to apply, and I really wanted to cover the topic for all the YouTube subscribers as well. So today we're going to be talking about reversals, specifically how to spot them and also how to trade them, right, to keep it nice and simple. So the main thing that we're going to discuss here is price, and I want to stress that before we jump into it, because I realize some of the topics that we're going to cover are a little more advanced, and if you don't really understand them, one, you can just take a second, comment below and ask a question, or two, right, you can just dumb it down to the very, very basics of what we're talking about, which is price. Okay, if you don't understand a moving average, that's based off of price. If you don't understand a candlestick formation, that's based off of price. So it all relates back to that. Okay, but without further ado, let's jump into it. We're going to look at a couple of examples here, and really we're going to go over the 2 things that you should be looking for when you're trading a reversal. Now, for reversals specifically, I will note that you should just be looking to actively trade this and not really have a long holding period. This is something that I'm kind of saying as a disclaimer, because mainly I'm a trend trader, but intraday for day trades and things, I really love playing reversals, even if it's over a 2-3 day period, because they have a really good risk to reward, right? So essentially, even if it's just a short-term reversal, a lot of times you're bouncing off of a key level. And let's say for Nvidia, for example, right, we're going to go over this key level and the basics of the reversal in just a second. But for this, we were looking for a bounce off the trend line. Okay, and that was at, what is that? Yeah, the 244s-ish, overlapping with another key level, of course. And our reward was up to 257.5. So you could see that there's about $13 of reward at our overhead target, and then in that scenario you're going to have $1 to $2 of risk max. So again, a lot of times as a trend trader, you don't usually see this big of a difference in risk and reward unless you're really leveraging things out. For a short-term reversal trader, you will get these solid reward to risk ratios that you don't really get for standard trend trading. So that's why they're kind of appealing to me. But the 2 things that you need for any given reversal are key levels, and on top of that, a strong candlestick reaction. So first things first, you can obviously see the 2 things that we're talking about here are fairly difficult topics, and a lot of you guys might be thinking, I know how to read a candlestick chart, or I know how to annotate my key levels. But a lot of times people think they understand these concepts fully, but they just know a piece of the information and what works for them. That's fine, but I'm teaching my method here, so specific to what I look for on these reversals, I'm mainly looking for certain key levels, and I'm looking for a specific candlestick formation that you might not be familiar with. Okay, so let's start it off with key levels and talk about why I played this Nvidia bounce, and also why exactly this was appealing. Okay, now for key levels, I'm mainly referring to a couple of things. Key levels can vary from Fibonacci retracements, and if you don't know how those work, we do have multiple YouTube videos on them and also a lot of member webinars on them. But they're fairly simple once you understand how they work and how to draw them. They act as big support and resistance levels. Okay, but for me, somebody who's trying to nail a bounce on Nvidia, I'm using that as a support level. Okay, so fibs first off. All right, second, trend lines. Drawing trend lines, we do also have a YouTube video on that, but that's something that you really just need to practice. Fibs are pretty straightforward. Drawing trend lines, swing low to swing low and swing high to swing high, that's just something that you need to consistently do in order to get it down. Okay, that also acts as a key support or resistance level. And then lastly, SMAs, EMAs, whatever you do use, the common usage is an SMA, right? If you're looking for a bounce off the 200 SMA or the 50 SMA, but some of the more common EMAs are 21, 13, commonly also the 38, Those are just, very typical ones that we see in day trading and, active swing trading. So overall, these are the three main things I look for on bigger time frames. And the time frame that we're looking at now is the 1 year, 1 day. Super common one. If you're unfamiliar with it, you probably haven't swing traded in the past. It's also referred to as the daily. But usually when I'm looking for a bounce, even if I'm looking to play a day trade, I'll look at some of these bigger time frames, because obviously the bigger the time frame, the bigger the move. The bigger the move, the better the risk to reward. And that might seem like a pretty minor or even straightforward comment, but a lot of people get wrapped up in this whole, let me look at the 1 minute chart. And that is good for really fast intraday price updates, but some of the trade ideas that you're forming before you even buy or sell the stock are going to be based off of bigger time frames. Okay, so you can get a much better risk to reward. So specifically for Nvidia, I'm using the daily chart. Again, that's the 1 year time period and the 1 day interval. Fairly common. And in this Thinkorswim platform with TD Ameritrade, that's just a default one. So if you scroll down, and let me erase this so you can see it a little bit better. If you scroll down here through the different time frames, you can see that we're on the 1 year, 1 day. It's one of the default ones. Okay, but the key levels that I use for this Nvidia trade, obviously you could see that when we were pulling back here, and this is the bounce that I'm referring to right here. Okay, we pulled back on earnings, and then we bounced back up. It seems like it's not that great of a risk to reward, but with call options and also just playing that bounce in general, there was a very good risk to reward setup here that we nailed in chat. Okay, so the two key levels that I used, specifically one was a Fibonacci retracement, and the other was the trend line. There were no key moving averages nearby on the daily chart. There were on the hourly, but specific to what time frame we're looking at, this is what played out. Okay, so basics of Fibonacci retracements, right? We draw our fibs and then we annotate the nearby key levels. So if we were to draw the fibs, the easy way to remember it is just left to right. If that's high to low or low to high, it doesn't really matter. But we're going left to right. So if the low is to the left, we're drawing it from the low to the high. Okay, again, some of you guys, this might seem like something that's very advanced. Take a second, pause the video, go back, and look at our Fibonacci retracement webinar. Okay, but that's 159.71. Notice I'm getting it down to the exact level. A lot of times people will just draw it a little bit roughly, and they'll say, oh, that's good enough. But this is based off of a very specific mathematical formula. So if we're a few cents off, that could be the difference between us nailing the move or us missing the move entirely. Okay, so my low point is on the left. That's the 100% extension. That's where we clicked first. And the high point is on the right. That is the 0% extension. And that is 269.2. Okay. Notice I have a little bit of a quirky color to this. I color code my fibs because I use them on different time frames. So right now, since we're looking at the price about in the 240s, 250s, you can see just at a glance where we're looking for a bounce really has nothing to do with this fib or this fib, etc., right? The only relevant nearby key level is right here. So just for the sake of keeping this simple, I'm gonna delete the other ones and hide them real quick, so we can just focus on that one key fib. Okay, so that's the first support level that we hit on this earnings pullback. Now, the second support level that we hit was also trend line support. And this is really important to note, guys, because a lot of times people will just annotate one key level and think that they see the full picture. That's the first thing I said once we, dove into the actual concept of key levels, is that a lot of times you'll see one level but not see the full picture. And the reason I'm annotating all of my key levels is because I really don't want to get caught in a head fake or completely avoid a resistance level or a support level that is relevant to the current price. Okay, so we not only have this daily fib, but if you zoom it out and we look at these swing lows, and my easy way of looking at the swing lows is just by doing this, drawing a line chart to the stock. Okay, and once we annotate those swing lows, you can see that's from here through these, right? It's just those V's that we have that correspond with the trend line. You can see that we have a few different points to draw our trend line. Okay, and all you need technically for any given line, back to Geometry 101, is 2 points. So right now we have quite a few, at least 3 that were high volume tests and resulted in a big bounce higher. Okay, so we can see that's a clear trend line support level going through those lows. Okay, and now on Nvidia, what we have now is 2 corresponding key levels, and they overlap, right? They overlap, and these are going to be the biggest bounces out there, or if you're shorting something, the biggest rejections out there when we really have overlapping key levels. It's the same thing if we had this 200 SMA up here as well, right? This 200 SMA in red, and that was right here in the low 240s. That's 3 overlapping huge levels of support for this stock that are likely going to result in a bounce. Okay, so first things first, right? We have our key levels updated. We have both of those on the chart, one of which is the 23.6% daily fib and the trend line support. Okay, now this charting again might seem advanced or might seem simple to some of you. I like to keep things simple and use the same method over and over. That helps me from over trading, that helps me from getting distracted, and that helps me from second guessing myself, right, altogether. So I have my 2 key levels updated. Now we're going on to the second portion of what I wanted to talk about here. Which is the actual candle itself. And I'm sure that it's a 50-50 split between the people that are watching this video that use candlesticks and bars, right? I'm sure some of you really like the candles. I personally like them. Bars are a more simplified version of it. But both of them show the exact same thing. They show supply and demand, where the buyers are stepping in and where the sellers are stepping in. Now, one thing I'll say, and this is definitely for the beginners watching the video, do not ever use a line chart. I always tell this story to my members, but there are a lot of people who think they know everything in the trading world. And one of the most classic examples that I use is I had this guy sign up and is for our membership, right? It's $50. It's literally nothing. So, it's not like only people with money sign up. It's a lot of beginners who want to learn, who have a passion for trading. And this guy signed up. His name was Stock Master something something. He was not a master of anything, because the first day in the chat room, he came out and said, okay, this stock is starting to run up. And we were like, hey, man, we're all out of the stock already. The setup already occurred and we played it out. And he goes, oh, that's weird. Seems like my quotes are delayed. He was using a Yahoo Finance 15-minute delayed line chart as his main charting method. And again, to some of you, you're probably cracking up and thinking this guy has no idea what he's doing. But he fully thought that he knew what he was doing and that he was getting real-time quotes. So at the very least, please, for the sake of this strategy of reversals and for the sake of this webinar, use either a candle or a bar chart, okay, and use real-time quotes. Seems like common sense, but you'd be surprised. All right, so I'm using candlesticks. That's what I prefer. Now, for this candle, just like key levels, right, we listed 3 different things. For key levels, we listed fibs, SMAs, and trend lines. All right, for these candles, there are 3 things that you have to know, and I'm going to write them out and we're going to go over each individual one. Okay, now the first thing for that candle is the closing price is what you're focused on. I'll go over that in just a second. Second thing is the lower shadow or wick. Again, you can probably already tell if you don't know what that means that you don't have an understanding of candles, and you need to go watch the video on it. Okay, but a longer lower shadow or a longer lower wick will result in a harder reversal. Okay, and the third thing is volume, relative volume specifically. So again, it is a lot of information. Notice that for this strategy, you do need to have an understanding of fibs, moving averages, trend lines. Okay, you don't necessarily need to use all of them every time, right? You can just look for one of these. All right, let's say I only play 200 SMA bounces, that's fine, but you're just not being as flexible as you could be, right? You're not really maximizing your potential and maximizing the frequency of setups. You're going to get less. Now, for the candlestick analysis, you need to just understand how candles work in general. The closing price is fairly important. That's actually the most important part. The lower shadow or wick on that reversal candle is also very important. And then last but not least, we need relative volume. on that specific day. So let's look at Nvidia and how it responded to the support test. So clearly this was the day that we tested support. Okay, right here. And based off of candlestick basics, let me draw this on the screen here. So we have a pretty big upper shadow, right, that aligns with the prior day's high too. That was the earnings drop. Then we have a fairly large body to the candle, and what this tells us is that this is the close. This is the open. You know, so overall, a pretty decent sized bounce back. And then on top of that, we get a big lower shadow as well. Now, specifically, this is not any candlestick formation that sticks out, but there are a couple of notes to make based off the three things that we look at. So for the close, the first aspect of the bounce, we want the closing price to be above the key level. Seems simple, right? But it's not as easy as it sounds. A lot of people see these bounces and they say, okay, I can only play this bounce on day one. That's it, right? That's one way of trading it, obviously. But the other way to trade this reversal would be on day 2 or day 3 when we get the follow-through breakout. So if that close doesn't really favor you, then you're kind of screwed in that sense, because if the close is all the way up to your price target, then you can't really play day 2 or day 3, and you would have had to watch it intraday a little bit closer for that momentum, you know, to buy the stock in the first place. But that closing price has to be above the key level. So knowing that this is a green candle and we know how candlesticks work, obviously this is the big support and it overlaps with this one. We want it over, at the very least, the daily fib, but obviously over both of them. And that closing price is above them. Okay, that's as simple as it gets. All right, so the close is above the support. All right, if we were playing something short and we were looking for a resistance rejection, we would say, okay, the close is below the resistance. It's just the inverse. Okay. Now the second thing we talked about was the shadow or wick, whatever you want to call it. I call it a shadow because that's how I was taught. But you know, for the most part, I think the more common term is wick, and that's this part of the candlestick. So I said it briefly, but almost every time we get an aggressive reversal on a stock, we're going to get a big lower shadow. And I'm not talking about just a little nub like this thing here. I'm not talking about this little nub here. I'm talking about a very, very big bounce off the lows. And normally when I do my member webinars, I'll pause it and I'll ask a question. And during my member webinar on Tuesday, you know, I asked a pretty simple question, which was in regards to why does this happen? And a lot of the members got it right, and I was really proud because, you know, that means I'm doing my job. But specific to that lower shadow, that drives a lot more momentum, and that shows a higher chance of a reversal because it means that there's a lot of demand for the stock. That's where buyers stepped in, and they said, no way, we are not letting this thing drop. And we got the big bounce back. So the longer the lower candle, the more aggressive the buying pressure. Simple as that, which gives us a better chance of reversing. Okay, so in this scenario, you can see we had a very big lower shadow. And I will show you an example right after this that does not have the big lower shadow. Okay, but it's a very similar chart still. So Nvidia, 2 for 2 so far when we're looking at the candlestick. Okay, now the last thing I mentioned was volume. And this is something that trend traders, right, if you're just now starting to trade reversals, and I don't think I've ever seen people go from trend trading to reversals. I had to get my ass kicked for years trading reversals before I realized it was just easier and less management of a position and overthinking to just trade the trend. But reversals offer a lot of great opportunities, so this is one of the more trend trading type aspects that applies to reversals too. It's a simple fact when we're testing a key level. If we test it on low volume and hold above or below it, right? Let's say that Nvidia is dropping down here, right? Hypothetically speaking. After earnings, Nvidia is dropping down, and this is the big support, and it just cuts through it like butter with very low relative volume, right? Let's say we put in that kind of a bar down here. That sticks out to me. That's noteworthy because we're very likely to head lower. That means there's no buying pressure. There's no bulls stepping in. There's no fight to begin with between bulls and bears. The fight's already over. Right? Bears win. So a low volume test of support or resistance shows that the current trend is likely to continue. That's what you want to see when a stock is breaking to 52-week highs, right? You don't want to see a huge surge in volume. You want to see a little bump in volume because that means that there are no bears to sell this thing down, right? So in this case scenario for Nvidia, you can see we had a very high volume test. The way you could tell is just in comparison to recent volume bars, but one thing that I do for all of my study sets, and this is called, I think, volume average study in Thinkorswim, all you're doing is adding a moving average to your volume. So if it's above that moving average, right, that line, this little yellow line here, then I can tell that it's relative volume. So you could see out of this entire period that we're looking at, it's just zoomed in on the daily, so over the past month and a half or so, no relative volume until a couple of days before earnings. And then obviously still some very big volume following it up. Okay, so again, the study's called volume average. I'll go to my studies here. So I'm clicking studies, edit studies, and you can see it's volume AVG. And you can keep a 20 or 50 SMA on it, whatever you find is easiest. Back test it a little bit, but it's called volume AVG. Okay, now apply that to your chart and you'll see that relative volume coming in. Right here, that is well above the average line. Technically on that day we had 21 million shares and the average was 10 million. Again, doesn't look like a huge jump at a glance, but that's technically a 100% increase in relative volume. Okay, so pretty big jump. And that high volume test earns it the third check mark here for a reversal. So we have the closing price that is above the support line of, I think it's about 246, 247. Okay, the close was up near 248. We have that lower shadow or lower wick, whatever the hell you want to call it. And then the high volume on the test showing that bulls are stepping in, which makes it a very likely reversal candidate. And now you could see over the next couple of days, right, we had not only a significant pop back up from 248 to 252 the next day, we inevitably went higher and filled the gap. That's not a term that you need to know for this strategy, but it's just a basic note. Filled the gap and kept running up. I'll tell you right now, because this is something that you won't be able to check if you're watching this a month or 2 months from now. We had a pretty low volume market day. The S&P closed up 0.1%. No, sorry, 0.01%. So pretty much even. And the NASDAQ gained about 0.4% today. Nvidia was up 3.75%. And on top of that, it was up another 2% yesterday. So this is all purely relative strength. And this is when, you know, a lot of people say, how do you scan for stocks? How do you find stocks? This is when you're able to say, okay, I found the right stock, I nailed the setup, and I picked the only stock that was moving at 3 p.m. when everything else was slowly dropping down. Right? That's how you know that you're playing the right tickers and the right setup here. So specifically on Nvidia, let's go over what we talked about. Right? Obviously, the price did follow through, and we had a great bounce back. Okay? But in this scenario, we looked at key levels, right? Specifically for this one, fibs and the trend line. And then for the candlestick reaction or bar, whatever you're using, we want the close above it. It earned the check mark for that one. We want the lower shadow or wick to show that buyers are stepping in. And of course, if you're shorting something, you want that reversal candle off of it too. You want an upper shadow. Okay, so whether that's a doji or a spinning top, whatever formation it is, that's a little more advanced, but you want that big upper shadow if you're shorting something. Okay, we did get that lower shadow here. And then last but definitely not least, we need volume to show that buyers are stepping in to reverse this thing. And we got that relative volume. Use the volume average study in Thinkorswim or just add a moving average to your lower studies. Okay, so checks all around. And it doesn't, I want to say this one last time, it doesn't have to be coming off of a fib, a trend line, and a moving average. You can just use one of them, but obviously the more support you have, the bigger the bounce too. Just like we said, the bigger the time frame, the bigger the bounce. Same thing applies. Okay, so Nvidia ended up bouncing another $14 from that support. Those of you who trade common stock, you're probably thinking, that's not too much. Those of you who trade options, you're probably thinking, oh my God, that's 1,000%. And it was a huge winner for the chat. Okay, and I'm going to show you one last example here. This does apply to small cap stocks, and it also applies to Forex and futures, but I'm just showing you examples from this week. There were not many small cap reversal plays this week because a lot of them were continuation plays, right? They were just trend continuations. So the prime examples here have been large caps. Another commonly traded stock that we nailed this week was Netflix, which came off of the same thing, right? So let's break this down real fast to wrap up this webinar. Key levels. We're going to look at fibs. Okay, moving averages and trend lines. And I'm going to run through this one fast. So let's draw our fibs up. Left to right. In this case scenario, that is low to high. Notice I just draw them real fast and then I go and edit it so I can get the key levels down to the penny. So that's 164.73. Whew, did not get that one right the first click. And then 423.21. Nailed that one. All right. So looking at this Netflix chart, you could see that Netflix had a pretty significant drop off post earnings. And we came all the way down. The only nearby fibs that are relevant are these. The ones that I left checked. They're the only nearby ones. And Netflix tested this key daily fib at 324.47. Okay, this Fibonacci retracement. And reclaimed it by the end of the day. Also, you can note there are no moving averages nearby. And the trend line is right here. Right, slightly missed that. If we zoom it into the hourly, you can see that it did actually touch it. It just looks a little bit different on the daily. But the bottom line, what we're mainly focused on here is the fib. Okay, now for the candlestick reaction, okay, we look at the three things, right? The closing price, the lower shadow, since we're playing a bounce again, not the upper, or wick, whatever you want to call it, and then volume, relative volume, right? So if we look at this, we have our fib drawn up. I'm just going to erase this to keep it simple since we already got that knocked out. That's the easy part. And then we can evaluate this candlestick right here. Okay, so initially we did have a pretty slow fade on the first test. Early this week, we had a heavy reclaim of that prior high, but also that key level. Okay, you can see that we tried to bounce on the prior day above that key level, but we got smacked back down. And then we reclaimed it with volume, but we did not get a big lower shadow. And here's the catch, guys. A lot of times, just like what we talked about for key levels, you won't need all three aspects, but for a bigger bounce and for a bigger reversal, you will want to see all of these three hit. Now, again, the closing price, if we evaluate this candle, is right here, and that is above this blue line. So check. The volume definitely increased on this day. Our average volume was 8.9, and we pulled in 13.5. Okay, so obviously a decent amount of relative volume there, right? If we want to take this out to percentages and whatnot, we could do the math, but that's obviously, you know, about a 40% increase in relative volume, which is substantial. Okay, so we did get that bump in relative volume, and a lot of times you won't need to write the numbers out and put it into a calculator. You can look at this and see that our volume is above that average line. Okay, just like this is above the support level. All right, and then the last thing that I mentioned was a lower shadow. Now, we don't actually have a big lower shadow here, and that means that this reversal doesn't necessarily have to play out for us. It gives us a little bit higher of a risk, but I will say that this is a very, very bullish candlestick formation. This is a bullish engulfing candle, which means that this candle completely engulfs, completely clears the range of the prior candle. Okay, showing an overwhelming imbalance between buyers and sellers, obviously in the favor of those buyers, of those bulls. So this kind of counteracts and overrides the lack of a lower shadow. It's a little more advanced, and again, that's why I'm saying that you need to be able to read fibs, moving averages, and trend lines. You need to be able to read the closing price, lower shadow, and volume, because if you only read one aspect of it, you're not going to be able to find all of these setups. You're going to be really limiting yourself. It's just like a basketball player who can only shoot three-pointers. Yeah, you might score here or there, but you're really not going to be, reaching your full potential and maximizing your points. So in this case, to maximize points, we factored in the fact that this is a big reversal candlestick formation. All right, and you can see Netflix with the follow-through. Even after this closing price, right? Let's say that you were late to this and you didn't see it and you waited for that close confirmation. 327. Today we closed up at 344. Dollar amount, that's a pretty big return. Almost the same as Nvidia. And then options wise, right, that is an even bigger gain. Again, that's bordering 500 to 1,000% if you day traded this week's options. Okay. And on the swing trade, we did have a few people swing trade this instead of day trade this in chat, and they reeled in 100 to 200%. So very large short-term gain. Okay, so to review what we talked about, guys, key levels, you need an understanding and just the ability to draw fibs, trend lines, and have your moving averages up. Okay, again, you can focus on one of these, master it, learn it first before you go to the next, but understand that until you understand all three, you are limiting your potential. Okay, and that's no way to be. So on top of those key levels, you also need an understanding of how to read a candlestick or a bar. Okay, and we looked at the closing price to be above the support or below the resistance. We looked at the lower shadow or wick. The bigger the better. Okay, and then volume. All right, and if you have any questions on any of these aspects, throw it in the comment section below. Again, I got a lot of good feedback from my members on this webinar on Tuesday, but normally the questions that we get in chat aren't, surrounding, well, what is a Fibonacci retracement? Because typically these traders have already researched that and tried to apply it. So if you do have a basic question, there is no such thing as a stupid question. Make sure to leave it below. And if you are interested in the free trial, right, we offer a free 1-week trial of our membership, which has 2 webinars a week, nightly watch list, morning email game plans, and on top of that, live screen sharing and audio access for alerts and webinars. So if you're interested in that, we have the free trial. If you want to just jump right in and get access to the full video library, it's $50 a month. Okay, so hopefully you guys learned how to trade some reversals here, and you have a potential setup to look for. This is the big part, the candlestick reaction. A lot of people just use this, and they're really not looking at the full picture. All right, take the blindfold off and factor in that. Okay, so thanks so much, guys, for your time. Hopefully you enjoyed this webinar. Again, let me know if you have questions, and hope you have a good day. All right, green screens to you.